Good morning, good afternoon, good evening, and welcome to the Tuesday, the 22nd of November, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. Welcome, everyone. We'll go through our usual regular run through in here today, just a couple of points of information before we start. So, first thing to say, is regarding we had a Tradeday. In fact, it wasn't out. It had nothing really to do with Tradeday. Tradeday had a significant issue yesterday. It was rectified fairly quickly. It was very late in the session, in the after hours session. So effectively, in the post hour session, in the evening session, and it was fairly quickly rectified. There were some issues for some users, not for many users. It's depending on whether you had open positions, etc. But we think we've rectified, or certainly the problem with Tradeday has been rectified. That was rectified relatively quickly. And any issues that anyone had within Tradeday, if you do think you had an issue, please reach out to us, send us an email. Otherwise, we think we've rectified all the issues. So apologies for that. Beyond our control, issue with Tradeday doesn't happen very often. Tradeday is very, very stable, but there was a problem yesterday. So apologies for that, although beyond our control. Second thing to remind you guys is obviously you'll be very aware if you're in the US that it is the Thanksgiving holiday on Thursday. Partial opens on Thursday and early closes on Friday. I have in the activity feed. If you go to the chat and site activity, I'll actually go there now because I can go there without going to the main trading room. If you go in here, you'll see I've put a post. Okay. Where is it? Oh, here we go. So I put up in here. So James has put the post up in here about Tradeday issue. Okay. And then I have put in a post in here. So look, adjusted trading hours. There is a link here that I shared previously with you guys. I can share that link again. Let me just open that link in here. If I copy that link, I'm going to share that link again for you guys. It doesn't actually give you anything directly within. Oops. That didn't work. What happened there? Copy link. You can go to here, go to this link. I've just put it in the chat. But the link is also here, and you can click here as well. I've also uploaded the spreadsheet. Now I can't really, it's not that easy to show the spreadsheet on here, but you can take a look yourself, right? You know what products you're trading. Obviously, most of you are trading the same products, but it's your responsibility, guys, to get this right. You know, to understand when the market closed, when you shouldn't be in a trade, when you should be in a trade. So please do your due diligence. Go take a look at that. Know when you need to be out on whether it's on Wednesday, Thursday, or Friday. Okay, I don't think it's really impacting on from Wednesday, but certainly through into Thursday, through into Friday, there's going to be different closing times. You need to be aware of those to make sure you're not in a position so you don't foul the evaluation challenge. Okay, so please do take that into consideration. Please do take a look. Okay, at that. It is important. Okay, so that's my nagging done for this morning. Let's go and get into the webinar though. So again, as I said previously, data-wise, it's super light this week. There's very, very little going on. We have the main data we have is really tomorrow. It's the global flash PMI data. We also obviously get the Fed minutes. Those are the main two focal points. And then Thursday/Friday, Thursday full-day holiday in the US, Friday partial day holiday. What do we have today? Well, we do get retail sales data out of Canada. It's not going to have a big impact probably on the markets you're trading. Do get Fed speakers today though. Mester in here. Mester's been on the wires already over the last 24 hours. George and Bullard all speaking today. So keep an eye on that. Overnight, we do get the RBNZ interest rate decision. That's the Reserve Bank of New Zealand. Shouldn't really have an impact on markets you're trading, unless you're trading obviously the New Zealand dollar, but shouldn't have a significant impact in here on the markets you guys are looking at. Let's take a look at 5 things you need to start your day. So crypto is still looking ugly. We've had further negativity coming through. Rumors of Genesis in here. It's a crypto brokerage and trading group in here that they have could be potentially filing for bankruptcy. We've also had Bitcoin then selling off and hitting another new multi-year low. Just went through the low from earlier in November over the last 24 hours. That hasn't had there was a very much a positive correlation between crypto and risk assets. Now, whether it's the tail that wags the dog, crypto I think is more reactive. So it's more the tail, and the equity markets, the broader markets are more like the dog that's wagging the tail. So, but what we haven't really seen during this latest bout of through the whole FTX debacle and all the contagion from that, we haven't seen that impact negatively into the broader market. So that's a positive for us in the broader market. Well, at least it means on the bigger picture that the crypto contagion is not impacting on the wider financial markets. COVID infections continue to rise. This has been a negative overnight. This has been a story that the market's been focusing on over the last few weeks. The COVID zero policy is still in place. In China, it seems that they're trying to move away from that, but the high numbers of COVID that they're seeing there is making it very, very difficult in here. And if anything, staying very much with that COVID zero policy at the moment. Societe Generale and Alliance Bernstein, nothing really going to impact us in here. European banking stuff. US equity futures slightly up, having been markets slightly lower yesterday. They're missing on here. There's some oil stuff that I want to just focus on as well. Oil studies after wild with Chinese demand, OPEC plus focus. So OPEC plus. We've had an announcement in here, I think, from OPEC Plus there was a report that OPEC Plus was considering an output increase. Okay, so there was a report that they were considering an output increase. Output increase obviously then puts a negative spin on oil, but then it rebounded yesterday with a little change. Saudi Arabia said that wasn't the case. So oil has been whipsawing significantly lower on that potential output cut. Remember, output was considered a major output increase. Excuse me. They've been cutting output over the recent months and throughout to 2022, and that's obviously kept the oil price relatively elevated. But there was rumor that a report that they were considering an output increase. Obviously, output increase, lower prices, and then that was denied by Saudi Arabia over the last 24 hours. So oil has been very choppy, and also obviously influenced from this overall demand, lower overall demand because of global recession, but also around the whole China story of the COVID zero policy. So US futures fluctuate as traders weigh Fed and China. So again, China's daily virus infections are near the highest on record. Okay, so we've got those things going on, and obviously we're awaiting the Fed. Bitcoin slide pauses in wait for next domino to fall. So yeah, we did go lower again and looking very negative on the cryptocurrency side. What else do I have for you in here? Wall Street slips this from yesterday's concerns rise of stricter China COVID curbs. And then Mesta says she supports smaller rate hike in December. No massive surprises there. We seem to be pretty much nailing on that we're going to switch to in here. This has actually continued to fall though. We were up above 80% last week. Beginning of this week dropped to 75. Now we're at 70%. So this is falling. This is the 50 basis point column, remember, from the Fed tool. This is the 75 basis point column in here. And so this is continuing to fall and this is continuing to rise. But nevertheless, Mesta on the wires, and Mesta is due to speak again later today. What else do I have for you in here? I think that's most of it actually, Mesta. So European, so a report out from the OEC saying Europe to be hit hardest in the global slowdown. No surprises there. There's a war in Europe going on in Europe, and the higher energy prices that we're seeing throughout Europe are certainly impacting Europe more aggressively than they are much of the rest of the planet. And again, more oil's rise as Saudi comments outweigh recession concerns. So Saudi pushing back on the rumours of an output increase. And this morning it's been fairly quiet on European exchanges. It's been fairly quiet so far this week, really. We've had the DAX is pretty much unchanged. The CAC, the French index, I remember the DAX, the German index, unchanged. The CAC, the French index, slightly lower by 0.2, and the FTSE is up by about 0.6 in here this morning. If we look at the US exchanges, we didn't have much price action yesterday. The Dow was fairly unchanged on the day. The S&P dropped 0.4, a little bit more from the Nasdaq. They never show it in here. And then this morning we've had a slight rebound, up between 0.1 and 0.2 between the S&P and the Dow and the Nasdaq sitting fairly unchanged into this morning. And you know what? I've got so little to say on the charts in here, guys. It's just nothing going on. We said it could be a chop day yesterday. We were already down here. This is the Nasdaq, and if anything, I had a slight negative spin. The Nasdaq didn't really go any lower. We held above last week's low, and we have dipped right down to last week's low. And we said, trying to bite at the bottom of the range and set towards the upper end of the range. And we went right down to last week's low. Last week's low was 528 and a quarter, and we went down this morning to 526 and a half. So we actually just pipped below the low there and then rebounded on the Nasdaq. So for me, if anything, if you're thinking this is still very much, it looks like a rangy market to me, very rangy. Now the underlying, there's underlying bullishness there, right? But a lot of this underlying bullishness there has faded. We've got the holidays coming up. We've got the Fed on Wednesday and those global flash PMI data. For me, we could easily just stay in this range, right? So if anything, I'd be more inclined to be on the buy side going into today. I'd probably be looking at this in here now. I'd be looking at this longer trend line on the Nasdaq, and then you've got the smaller internal trend line. So I'm just going to borrow this trend line in here. I'm going to whip that one around like this. If it'll allow me to do that. What's sort of allowing me to do that? I might as well just draw a new trend line. Let's just get rid of that one. And we've got this more accelerated one that will come down through here, which we're already through. But then you've got what I would class as like an internal trend line, this one in here. So not of this actual peak in here, of this secondary peak going across here. So that one's important as well. So you've got this one coming across here. I'm going to get rid of this one actually. So this one's been reversed already. Get rid of that. And so we've got this one here, which is just above the overnight peak. So you've got all these overnight peaks in here on the Nasdaq. Let me zoom in a bit. So you've got these peaks in here. They're gathered in the 11,620 to 11,635 area, and the trend line's coming in around the same place. So up through there looks more positive. If it breaks above there, I'd be happy to be long. I'm kind of defended this low from last week in here. I'm just pipping down to that low and then rebounding. So for me, it feels like a chop day. It feels like a range day. I mean, for me, I'd rather play it from the long side. If it takes out the lows here, though, then you're short, right? So don't be holding on to any particular strong view in here. The market's very choppy, very rangy. So again, looking for another chop day. Nothing. We got some Fed speakers. They're unlikely to say anything too surprising in here. And so yeah, for me, I'd rather wait for a break above maybe 635 to be long. If it takes out the lows, then I'd rather be short. Okay, so that's fairly simple on that one. Let's take a look at the S&P. S&P's sideways city in here. I mean, look at the change in the closes. There's the highest close in here for the last week and a half is around 39. Well, actually, I can tell you exactly. It's on that close there. That's the highest close, just below 4,000, 39.99 and a half. And the lowest close in here, we actually probably posted yesterday, is at 39.37 and a half. So a very tight range, considering that's been 1, 2, 3, 4, 5, 6, 7 full trading days. Okay, and the market again bouncing back from the bottom end of the range, and we go into the 15-minute chart in here. Look, it's just you've got this kind of potential head and shoulders pattern. We had the neckline, it broke the neckline, and then it's just eking out another sideways in here. It looks like you want to buy it down towards 39.35 to 45 area and sell it in the 39.90 to 4,000 area, kind of stuff. And where are we at the moment? We're kind of in the middle of that, but again, a slight upward, slightly upward bias in here today. You've got a string of peaks running across here, so it takes out these peaks, which we're close to. 69.75 and 69.70 and a half. So up through 70.71, it looks more bullish. Probably only looking for it maybe up to 39.99. Up towards 4,000, and then you're probably looking to maybe even below there, 39.90, 39.90. So it's a difficult trade as well, because then where do you put your stop? Where are you more negative? Actually, let's just draw this longer trend line. Let's pull this one across. So we're actually through that trend line. So you have reversed the trend line in here as well. So that's looking more positive. So the S&P, and not surprisingly, the S&P looking a little bit more positive than the Nasdaq. So yeah, I think we reversed that trend line as well. And it's a good trend line. You draw it from here. You can see them. I kind of respected it through here, and then when it broke, it went impulsively through that level, and then it's using the underside of the trend line as support now. So yeah, I think it's a good trend line. And yeah, so upward pressures again in here. Long through 39.70, 71, but maybe only up towards 39.90, 95 kind of area and going into today. Not looking for too much. Quick nod to oil and gold. Let's start off with gold first of all. So I was slightly more negative in here going into yesterday, but the market just did go a little bit lower and then a little bit pop higher in here going into this morning. So we did go a little bit lower after the webinar, and now we've popped a little bit higher in here. It does look like, again, it's trying to reverse the trend that we have. So if I put on the trend line off the top from the last few days, we're flirting with that trend line. Look. And you have taken out this peak in here. So you've got like a little pattern in here down at the bottom. You've got like arguably an inverse head and shoulders, shoulder here, head, shoulder, okay. Arguably neckline across here. Neckline's already been broken. Arguably there's a neckline going through there. And now flirting with this trend line. So slightly positive spin, I would say. On my report from yesterday, had a negative spin on gold, but I think, given overnight activity, slightly more positive spin going into this morning. So back above the overnight peak, back through like 75, 50, 51, looks more bullish in here. Only starts to look more negative below like 1744. So above 1750, 51 and below 1744 kind of area. For gold, let's take a look at oil. Remember on the January contract in here now. Let's go to the daily. So there's that whipsaw price action yesterday. Big sell-off and then a big rebound. Went right the way down to the lows in here. Kind of just held at the lows, I think. Yeah, just held at the lows in here and then rebound. So that was rumor of output increase and then rejection of the output increase and now pushing back higher. And if we zoom in to the 15-minute chart, going to get rid of all the old analysis in here. So there's this kind of, and you'd argue it's kind of like a big-headed head and shoulders pattern, right? It's not the best in here, but, it's broken through, arguably the neckline to that across here, right? You've got kind of a neckline running there. You've got this big head and you've got a shoulder here and like a funny little shoulder over there. So you'd argue that, the risk now is back to the upside going into the day and we're pushing higher. Not looking aggressively high, but maybe up towards like 82.5. On oil with a big rejection. This is a massive rejection of the downside after yesterday's price action. Saudi Arabia pushing back on the rumors of a output increase. So bias there back to the top side for oil, maybe towards 82, 82.30 kind of area into this zone, back up into here. Okay, I'm going to wrap it up there. Going to wish you all a great trading day. Watch out for those Fed speakers later today. And don't forget, please do check out the calendar. Know what's going on Thursday and Friday with regard to the closes. No excuses. Your responsibility, guys. Please make sure you do your due diligence. I've pointed it out. We've put it on the site. We can't do any more. We've sent emails out, blah, blah, blah. I think we sent emails. If we haven't sent emails, we will send an email. But it's up to you guys to know what's going on with what you're trading. Okay, so, and we've given you a heads up. So, have a good day, though. Enough nagging. And I'll be back with you with the bull versus bear webinar. Obviously, there will be no webinar on Thursday. As a heads up on that. No webinar on Thursday. We probably will do one on Friday. Yeah, we will do one on Friday. We will. We'll do one on Friday, but there won't be a webinar on Thursday. All right, guys. Take care. Have a good one. Bye.